If you have unfiled tax returns with both the IRS and your state, you really should consider filing your state first. I'm Michael Redden, and I'm a tax attorney here in Minneapolis, and I help taxpayers all over the country settle their tax debt with the IRS and their state taxing authorities. Now, most of the time, if you haven't filed one return, you haven't filed both of them, right? You don't just file the federal return and not file your state in most cases. Now, when you have these unfiled tax returns and you want to get straight with the IRS or straight with the state, you got to file at least the last 6 years of tax returns, and you've got to make your quarterly payments or have enough withheld so that you don't owe at the end of the year before they'll even talk to you about settling that debt. But what you probably didn't know was that maybe you should think about filing that state return first. I know it's kind of weird, right? And if you ask your tax preparer about that, they'll may look at you funny and be like, what do you mean? We file them at the same time. But there really is a difference when it comes to settling your tax debt if you have back tax debt that you want to solve, right? Essentially, if the IRS is first, and the IRS is always going to say they're first, unless you can prove that the state assessed the tax before the IRS, then the IRS is going to say, I don't care about the state, okay? Whatever you've got going with them is a separate thing. If you want to settle with me, I want as much as you can possibly pay. It's called your reasonable collection potential. It's basically after you take your income and your expenses and things like that, whatever's left over, the IRS wants it. And essentially, if you're going to have to go settle that state tax debt too, they're not going to care. They may give you a credit of 10 or 20% of what you're paying towards the state when they determine what they want for their money. That makes it really a lot harder to settle with the state or maybe even pay the state, right? But there's an exception to this. If you file your state tax return first and let the state assess you and the state send you that bill, then the IRS is going to say, you're right, the state's ahead of us. So then if you go get on a payment plan with the state or something like that, all that money you're paying towards the state, the IRS will say, you're right, that goes first. And that means there's less left over to pay the IRS. Maybe the IRS will get really impatient and say, you know, you're right, we don't want to sit here and take this small amount for the next 6 years. Maybe you just give us a lump sum and, you know, we'll do an offer and compromise and we'll settle for pennies on the dollar. Or maybe you get a smaller payment plan that go pay with the IRS. And in this way, you can use the state's debt as leverage against the IRS, because the states often are much more aggressive, believe it or not, than the IRS is. But at least the IRS will recognize the state and get behind the state if they filed first. If you file the federal debt first, then the IRS isn't going to care, and it complicates matters because the state and the IRS are saying, we want our money and we don't care that you owe the other government. So if you haven't filed your taxes and you know you're going to owe, maybe ask your tax accountant whether or not you should file that state return first. And if you want to do some more strategy about that and you'd like to talk to me, go to taxhelpmeeting.com. That's taxhelpmeeting.com, and we can talk about it.